We now turn to one of the president's key advisors on China, White House Director of the Office of Trade and Manufacturing Policy, Peter Navarro. Thank you for being here.
Good to be with you this morning, Margaret.
Does the U.S. stand with these pro-democracy demonstrators?
The President has been quite clear that he hopes for a peaceful outcome. He's urged people to remain calm. It's gratifying today that the protests are peaceful. The issue here, as your viewers well know, is that China promised in a treaty with Great Britain that the people of Hong Kong would be able to determine their own future until 2047. And that's an important commitment we hope they'll make. And that's all I can tell you about that.
There is this perception, though, that the White House is pulling punches on human rights issues because it wants this trade deal that you're working on finalized. Will Beijing face consequences if there is any kind of crackdown?
I can tell you that the issue of Hong Kong has never been part of the trade negotiations. I won't speculate about what may or may not happen. I think we just need to remain calm, encourage the Chinese to fulfill their commitments. And what I worry about when I go to work every day is creating manufacturing jobs for the men and women of America. So I think about littoral combat ships being made in Marinette, Wisconsin, or combat vehicles in Lima, Ohio, or getting a new production line in Greenville, South Carolina for the F-16. So that's my mission at the White House, and that's my lane.
So in that vein, we've had a strong economy.
We have a strong
low
economy.
Unemployment.
Historically low for blacks,
low.
women, Hispanics.
S&P 500 up something like 15% on the
Beautiful
year.
thing.
It was rocky week, though.
Beautiful thing.
And there are now some signs emerging that perhaps there is a slowdown coming. What are the odds that you see of a recession?
So before I came to the White House, I spent the better part of 20 years forecasting the business cycle and related stock market trends. What I'm seeing, looking at all the macro tea leaves, is a very strong Trump economy and bullish stock market through 2020 and beyond. And the things I'm seeing now in the short run that your viewers can watch to see if they come to fruition would be, for example, the Federal Reserve aggressively lowering rates through the end of the year. The Fed raised rates too far, too fast. They've cost us a full point of GDP growth.
They are expected to lower them.
They are expected to. Second thing, the European Central Bank has announced a very aggressive stimulus package, cutting rates and quantitative easing. Why does that matter for us?
Central bank buying securities.
Correct. And that will lift the European economy. And what that matters for us is they'll buy more of our exports. There's a likelihood that China will engage in a second round of fiscal stimulus, which will help the emerging markets, which deliver the commodities to the Chinese manufacturing machine. And most important, the short run for America here is by early October, we hope that Congress rises above partisan politics and passes the U.S.-Mexico-Canada agreement. That will add several 100,000 jobs to our economy.
Has Speaker Pelosi agreed to do that?
Speaker Pelosi is working closely with Ambassador Robert Lighthizer, and we are trying to work with the Democratic side to basically address all their concerns about enforcement and other things. This is, no hyperbole here, the biggest deal in world history, but it is also, in my judgment, one of the smartest and best deals. And what it does, the central premise of the deal, is to bring our manufacturing jobs back here to U.S. soil from the giant sucking sound that was NAFTA.
That would be helping to settle the trade dispute with Canada and Mexico. On the issue of China, though, President Trump, here he is earlier this week, explaining why he pulled back on a pledge to roll out some tariffs related to consumer products.
So we're doing this for Christmas season, just in case some of the tariffs would have an impact on U.S. customers, which so far they've had virtually none.
So have U.S. retailers convinced the president that it is American importers and consumers who will pay the price for these tariffs?
So let's be clear. We've had tariffs on for over a year. The Chinese have borne the entire burden of that by slashing their prices and reducing the value of their currency by 12%.
The president just said there, though,
Correct.
that he's doing
Now,
this out of concern it could hurt consumers.
Let's look at why the president delayed half of the tariffs until December 15th. I was there in the Oval Office when a group of business people came in and made the following very persuasive argument. They had already bought everything that was going to be on our shelves, but they'd done it in dollar contracts, which means they weren't able to shift the burden back to the Chinese. But they also told the president quite clearly that they were also moving their production, sourcing, and supply chain out of China as fast as possible. And so beyond December 15th, there will be no impacts on consumers because of all of that. So it was a goodwill gesture that the president made to the Chinese. It was a wise decision to delay the tariffs to December 15th. And in the meantime, half of those tariffs are actually going on September 1st. The tariffs are working. They're an important part of the strategy to bring the Chinese to the negotiating table. And I think, Margaret, it's important whenever we talk about the tariffs, we talk about what we're fighting for.
But they haven't made any concessions just yet, the Chinese. And in fact, they've pulled back on some promises.
Yes, but as I say, it's important for your viewers to understand what we're fighting for. And it's the hacking of our computers to steal our trade secrets, forced technology transfer as a condition of market access. It's the intellectual property theft, the dumping, the state-owned enterprises, the currency manipulation.
And that is why so many people on Wall Street cheer this hard line, and so many people in Middle America do too. But
let me give
then you have farmers coming out and warning that they are losing markets, that they are getting hurt, which is why the taxpayers are bailing them out. And you have concerns from Wall Street being indicated here with pullback in future purchases of things like tractor equipment.
Let me say two things. One is the seventh act of aggression, which I want to mention, is the killing of Americans with made-in-China fentanyl and opioids. By the end of the day, it'll be over 100. By the end of the week, it'll be over 1,000. And China, made-in-China opioids are killing over 50,000 Americans a year. That in and of itself is grounds for a very tough stand against China. With respect to the farmers, President Trump has the backs of farmers. He's demonstrated that with Sonny Perdue, the Department of Agriculture Secretary, by setting up a program where we use whatever revenues we collect from the tariffs and whatever else we need to make sure the farmers are whole in America. The farmers have their back. The farmers know that they're in the target of the bully China. But we're not going to let that buckle the president's knees. He is committed to this fight. He has the backing of the public. He has the backing of people like Joe Manchin and other Democrats on Capitol Hill.
A lot of people like
this,
aligned. But they don't like the tools like tariffs. And so how can you promise the American public that they will not feel the impact of these tariffs backfire to them if the people who sell them goods, like retailers, convince the president that they would?
So let me say two things. We've had tariffs on for over a year, $250 billion worth, and we haven't seen a thing in terms of inflation. We've seen the Chinese
economic indicators backward-looking versus the market, which is
devalue their currency and slash their prices. Going forward, what we're seeing is the fleeing of the supply chain. What's happening is retailers are finding other sources of supply, and we're getting investment back here in America. And by the way, consumers spend $14 trillion a year. If we have 10% tariffs on $300 billion worth of goods, that's $30 billion. Even if all of that were passed on to consumers, you know what that would be? That would be 1/5 of 1% on the consumer price index. It's nothing.
We have to leave it there.
Thank you.
Peter Navarro, thank you for joining us.
Nice to be with you on Face the Nation.